Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, May 27, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. So today we'll look at stocks that I think are in the middle of a counter-trend rally. We'll see if the bears will fade this rally and where to sell short or if to sell short. High yield bonds, junk bonds also is very strong. It wiped out 4 weeks of losses, so it definitely a strong, but still a counter trend rally. I'll show you what I mean. Same goes for Treasury bonds. They're at resistance, but I think interest rates have a little bit of room to fall. Natural gas hit 52-week highs. Oil could be very soon hitting new 52-week highs. And dollar may have more to fall, but we're not sure if gold will take advantage of that. And many cryptos broke support from 2021 lows. Bitcoin is very likely. Next, we'll also look at Ethereum. If you're a subscriber, I have a separate video that's going to cover the various stocks we trade. So stay tuned for that. And once again, please don't forget to hit the like button and subscribe. So on this chart, first of all, we're looking at this is S&P 500 on daily time frame. So daily time frame means 1 day. Each candlestick, this is a candlestick, this red or green candlesticks, they look like candlesticks. They're called candlesticks. So each day is worth, each candlestick is 1 day's worth of activity. Many people, for some reason, have trouble with that. So first of all, my indicators. So on this chart, we have the green, blue, red, and yellow lines, and these are MasterCharts Trading support resistance lines. So on this chart, you can see I have them applied, and so if I click on what do you call it, settings, we can see the length as 250, you see. So for daily charts, we use 250. So each candlestick is days worth of activity, use 250. Anything less than that, like 5 minutes, also keep it as 250. However, if you're gonna go to weekly charts, so this is a weekly chart, for example, that means each candlestick is 1 week's worth of activity. Notice 1 week. In that case, you have to change the settings to 52. Okay, that made sense, hopefully. So if it didn't make sense, let me know. So on this chart, we're looking at S&P 500 futures that made what appears to be an intermediate low right there on May 20th and a strong rally. So as we speak right now, the S&P 500 is approaching this red support resistance line, which is at 41.82. So this is what I would call strong resistance. Weak resistance was right there at the yellow line at 3975, and it was obviously broken. So we have burst through that resistance, and we're now approaching strong resistance at the red line. So what I think is right now, the stocks are in a downtrend. So once they get to resistance, currently at 41.82, we will consider a top-in pattern. If the top-in pattern is put in, then we'll consider selling the stocks short. This hasn't yet happened, and also additionally, it is also possible that we will not top here, and indeed we will continue higher. Now, what would it take to get to the bullish levels? So bullish levels are at 44.33. Can we get there? Absolutely. I am again not married to any one side. So bullish levels are about 7% away from today's prices. If we get to that level, 44.33 currently, and close above it, above this blue support resistance line, 44.33, then I think we'll be back in a bull market. And from then on, we'll just start buying again. But for now, I think we're in a downtrend, so we'll be looking for a resistance, and we'll be looking to sell it short. let's look at Dow Jones. So Dow Jones, as we speak, you can see it's broken above this red support resistance line, which is strong resistance. Now, I generally speaking look to S&P 500 to make decisions. So yes, Dow Jones is important, but I think S&P will make more important decisions, so to speak. So I'm looking for a top-in pattern. So we had a top-in pattern, for example, right there on May 5th, May 4th, May 5th. But right this instant, we don't see a top-in pattern, we just see a rally from the lows. So we'll see what happens Monday. I think, once again, I think we still have a little bit of upside for S&P 500. I think we'll be looking for a top-in pattern on S&P 500, and by extension, it will be a top-in pattern on Dow Jones. NASDAQ also has moved higher from the lows. It is under pressure. So, you know, and then NASDAQ has quite a ways to go until strong resistance. Currently, we are at 12639, but strong resistance is actually about 6% away up. So we will see again what happens to S&P, but it does make sense for NASDAQ to continue the rally. And if or when we get to 13469, I'm reading it right off the chart using my indicators, that could be an end to this rally. Looking at Russell 2000, so you can see that patterns are very similar in a sense of now we're seeing a rally from the lows, but you know, Russell 2000 small caps actually entered the bear market a while back in January of 2022 of this year, and you can see, you know, 3 opportunities to sell it short, all successful. So this counter trend rally we're witnessing could take it a little bit further. Once again, we'll look to S&P 500 for most important resolution, but it's not out of the question for the Russell to move another 5-6% higher towards the support resistance line at 1984. Looking at junk debt, so junk debt and S&P 500, junk debt and stocks correlate highly. So this is this is junk debt correlation to S&P 500. You can see that they move together in lockstep most of the time. Sometimes they do their own thing, but most of the time they do the same thing. Also notice this really enormous candle. So we got 1, 2, 3, 4 weeks, almost 5 weeks of downward movement wiped out in 1 week of action. So this is extremely strong. It is a very good sign if you're a bull. Right this instant, once again, I think we are in a downtrend for S&P and for high yield bonds. We are approaching resistance literally at 100, so it's just like a percent away, not even, for junk debt. So right now we're at 99.32. Resistance is at 100 exactly. So we'll again see what happens next week. I think we will get to this resistance at the very least, and we'll see if a top-in pattern unfolds there. If it does, then we will act accordingly. Looking at treasuries, so treasuries are in a downtrend. Latest opportunity right there where I'm hovering at the beginning of January, successful 20% move in our favor. Now we're seeing a move back. So looking at treasuries on a daily time frame, we're literally at resistance. So this is weak resistance, and before, for example, right there in March, April, end of March, beginning of April of this year, the resistance indeed came in and it acted as such. Will it act as resistance again? So looking at government bond yield, 20-year government bond yield, which moves opposite to treasuries, TLT, we can see that yield topped out right there on the 11th of May. If we look at TLT, it bottomed out here on the 9th of May. so a few days later. So right this instant, what I'm seeing is we're seeing a pullback from the highs for Treasury bond yields, which, could be considered a good thing if you're a real estate investor, etc. So it will help you, for example, afford more house if you're in a market for housing. So I think the pullback for the government yield could be a little bit more to run. So it is very likely that the treasuries will continue higher for a little while still. However, once again, the resistance is really strong, just about 7% higher at 128. We're currently at 119. So we'll be looking for a strong resistance higher up here for treasury bonds. And briefly, I want to show oil. So we are long oil, crude oil, and we are again approaching 52-week highs. So it's quite likely that we will break to new highs. So we're looking at $128, $130 per barrel, possibly higher. Just the way this pattern is looking, it looks quite bullish. And another brief look at natural gas. So natural gas, big move in our favor, 83% move in our favor. Alert was sent for the natural gas right there, 22nd of March. Had two opportunities to take some profits. I mean, the size of those moves are quite dramatic. So if you are not really used to trading natural gas, then definitely not the first choice if you're a beginner trader. But if you are a seasoned trader, then you can trade natural gas using my indicators. Very nice move. So again, if you held down, that's 83% move. Congratulations. I think new highs for natural gas. I mean, we just made one high right there, 26th of May, yesterday. So it's quite possible we'll continue higher. Looking at dollar, here's DXY. So let's look at weekly chart first. Here's dollar index, and you can clearly visualize the breakout right there on July 13th, where I'm hovering right there. So it's a breakout above my support resistance line, the blue support resistance line, and then we just had a tremendous move. It's over 12% move basically for the dollar. It's huge. Now we're seeing a pullback. So looking at this chart right there, looking at this is a weekly chart. So you can see that we broke below this green support resistance line. I mean, this did happen before, for example, right there, 31st of January, and then another time here on 10th of January. But I think, just the way this pullback is unfolding, I think we have more downside. So it's quite possible that we're going to continue lower towards 99 for the dollar, which is about 2% lower. Again, this is a dollar index. So if you're trading individual currencies like euro versus US dollar, your results will obviously vary. But the fact that the dollar is pulling back should help gold. And it's somewhat helping, but not really helping as much as I thought it would. So gold broke down into bear market. I think we're now in a bear market for gold. Now, I didn't send an alert, but the latest signal is actually bearish right there on the week of 9th of May. So far, that didn't really go anywhere. And so the gold is stuck between bullish levels, which is at 1923, and bearish levels. If we break below 1825, I think we'll continue significantly lower. This hasn't yet happened, and again, if the dollar weakens, then we can see gold appreciate. And looking at Bitcoin, so looking at weekly chart of Bitcoin, I drew in this, I'm gonna make it, I don't know, yellow, not yellow, maybe some other color. Let me see. Here's a greenish line. So okay, so there is this light blue line from a few weeks ago, and we broke that support on May 2nd. And currently we are breaking support that was from the lows where I'm hovering from June 2021. So it does look like, see, we got 3 weeks. I'm going to zoom in on this chart right there. We're trying to break down here on the 9th of May, on 16th of May, and finally this week on 23rd of May. Now, because Bitcoin is traded 24/7, we still have 2 days left in this week, but it just doesn't look good. I think we will close below 2021 levels and most likely collapse to like 10,000. We are actually already seeing this for Ethereum. So here's Ethereum also closing below 2021 levels, and most likely will continue lower. So overall, it just doesn't look good for cryptos. All right, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up and sign up for one of the services. So I have 4 levels of services. The trading indicators are these lines on the chart, and they will help you tremendously in your everyday trading, just making very simple yes or no decisions. Then you can have this indicator lines on your chart if you have a TradingView account. So TradingView.com account is free, but you need to sign up on MasterCharts Trading, and I will open the door for you on TradingView. Just send me a message. That's $29.95 per month. I think it's a great deal. If you want the newsletter, so newsletter is the daily email alerts and weekly members only videos, and we cover separately all of these various stocks. I think the best deal, of course, is to get both indicators and newsletters, $59.95 per month. I think it's a great deal. And if you want to get one-on-one screen sharing session per month, I offer 60 minutes at $259 per month. That also includes the indicators and the newsletters. All right, please, again, don't forget to hit the like button, subscribe to this channel, share this video. This is important to keep this channel going. Again, thank you for watching and have another great trading week. Bye-bye.